All right, hey everyone, this is DayTraderRockStar with a special educational video today. And today I'm going to be talking about some of my favorite patterns that I trade. Now, I'm sitting here and I want to wing this. Sitting in my office here today, Saturday afternoon. Normally, I'm off, take Saturdays off and get back to work on Sundays, but was really want to get a lot of research in this week, and also want to just definitely get out a good educational video. And I'm motivated to do this because this is my favorite setups that I love to trade. And I've learned a long time ago that I'm not smarter than the market. The market is almighty, it's all knowing. And when I try to fight it or think that I know something, more than everyone else, that's when I get smacked around. But what I do know is that what I see in the past in charts and stuff and how things work out and the reason why things don't work out and they continue to work out, and there's a pattern to that. I know that's real. It's not like one day I have to hope that the market's going to go up but when I see patterns and technical areas of support, these are really things that cannot be denied. And once you find those and once you recognize certain ones, all you need to do is have the patience and the patience to wait for them to set up, the discipline to get in them, and your trades and your success rate is going to go up, up, up. And it's mainly because we get into the market every day and we try to figure out, all right, let me just take a hunch and get into this stock, or this stock is moving up. Let me jump a ride. There's never really a managed plan, and this is what's so valuable about this. This is how you become a professional. You become a career trader. Is having that discipline, having the patience. And if you just wait for your setups, um, you know, like all the work is done for you. So let's go over a couple of these patterns here, and these are actually some of the trades that we took this past week, and some of them are just good setups I want to show you, and I want to explain the setups. All right, this one is what I call the stochastic price divergence. All right, stochastic price divergence. And just I first of all, my number one indicator that I use is the stochastic indicator. All right, full stochastic 14.3 with a 3 smoothing. And as you probably heard and watched my videos before, I like other indicators to back up that stochastic indicator. Again, you could take the short overbought or go long oversold. So I want to have the stochastics usually in an oversold level, and then I want to either work with my trend lines, my moving averages, support and resistance, and some other, candlestick type of patterns. But the majority of the time, I'm looking for the stochastic to be oversold and to be in a certain pattern where there will be a trend line underneath, and that is perfect. Now, determining direction and stuff, you could learn that by your price stochastic divergence. Here you can see there's a channel, a nice little kind of a wedge pattern, and wedge patterns usually break to the upside after it's a downward wedge. And I look for to take that trade off the lower part of it. All right, so each time the stochastics pull back, you can grab onto the lower trend line. And now once the pattern's established, the next time it gets down here, you got a high probability setup for a nice move up, in which you do. And then at this point, we're starting to see a change. And stochastics came down just about to oversold level, but we held off of the recent lows. And again, we came back down to this one, but again, holding off to those recent lows, not making a lower low. But that oversold stochastic and the over low here, and pretty much the double bottom in the midpoint of the channel here, are leading other indicators underneath it. I told you, but it was a really great entry, and because it's the downward wedge, you're looking for a break up to the upside, so you'd be going long there. So that was a really good trade. A lot of people were in it still. It's FRO, and it looks good going into next week. And that's the stochastic divergence. So it's when the price level or the overall pattern is heading down, the stochastics will give you that oversold level, and then it'll be a lower low, and it'll be oversold level, oversold, and then so on and so on. So once you start to see the divergence, oversold level on the stochastics, but the price might be not making a lower low. That's your divergence, and that's what you look for. You'll get other examples here in a second. Eastman Kodak was a trade this week, and I got into this one because basically the stochastics got oversold. All right, on a stock like this, Eastman Kodak, and not a very big stock. It's kind of a weird type of stock because it's so low price, yet there's it's a big name and stuff. So I knew that the indicators would work pretty good on this because we were actually long here riding this one up. Then we took profits, and I just waited it out, and then one day I looked at it and I said, oh look, the stochastics are set up. It's a nice pullback. It's holding off a recent low, so we're having a positive price stochastic divergence. So normally you get oversold, you get a turn up, and off goes the price, and that's exactly what happened. Unbelievable trade. I mean, you're looking at a move from $3.80s, $4 to close to $5. So that's Eastman Kodak, BBBB. I just want to go over this. Another wedge pattern. Again, I just want to continue to show you how to work with the stochastics and the trend lines. So yeah, what I really concerns me here is that we have a very good established downtrend line and a downward facing pattern. And again, we have a low here with oversold stochastics, and we got the stochastics selling off again, and we get another low here. And that actually establishes that trend line. So, I mean, even in that signal, having a buy signal just based on the oversold level on the stochastics. But really, you want to really see the trade take place up here, and this is where you start to bounce up against this trend line. And yet you're not rolling over, you're not making new lows, and you're starting to tighten up here. And as those stochastics come down, you see that we're just heading pretty much sideways, even though there's a little choppiness here to here to here to here. We're basically going sideways. That's where the price is. So as the price is going sideways, it consolidated, the stochastics are coming down. That's a positive stochastic divergence, what I call a positive stochastic divergence. That's where the price maintains its level, and the stochastics get back into an oversold, or make that make a move a move that is opposite or different from the consolidation. Meaning, normally you would see the price just flattening out, stochastics to be flattening out. But it's once we start to get oversold, everything sets up for a nice move, and that's exactly what happened on BBBB. So a couple other of those setups. We've been taking those all the time on the show. And again, I don't know. I do a show each day, DayTraderRockStar.com, where I trade these setups. Right from the open to the close, live, and you get to actually see the screen. And I show you how to identify these setups in the market. These are such good setups. Here's ONNN. This was from last week's watch list. And again, the reason I like this is because there was a slight stochastic divergence here, pull back in the stochastics, but the price was actually holding sideways consolidation. Now it takes a trained eye to start seeing this and recognize it. It takes a little experience, and that's part of the game. Nothing's going to get there overnight, but once you start to develop the experience, develop the patience and discipline on how to recognize these, how you do your research, then you'll get more confident in taking the positions, letting it ride, and not being so worried of taking random trades. I'm like saying, this is so important, and you'll never get this type of valued information because it's truly invaluable. Knowledge and experience, and goes back. And I said, and I don't know why you even talk about this so much, because it's such a beautiful pattern to trade. And once I find it, it's like you're going to be making money, and there's nothing better than that when you feel confident about that. Here was Discovery Channel. This was one of my favorites going into this week, and I traded this one. And again, it was basically a perfect setup. And I came out and I said, this is a great setup, people. You got a pull down in the stochastics into an oversold level, sideways consolidation, and we moved right up along that. This move is still on, and I still like this DISCA. I still like it. I think we're going to head up. I think I'm going to get back in it, actually. But I absolutely love the setup there. And it was a perfect setup. CHK is one that we just triggered this week. And again, this is an example of what? Same thing. Stochastics making lows, price making lows. All of a sudden, stochastics making low, but the price is not making new lows. So we're holding off a recent low here. So we're actually showing a price stochastic divergence. And that's important. That's my other, it's either this one or the positive stochastic. You could trade these patterns. You're going to be doing good, because what you're doing actually is you're taking the best possible low risk entry, according to the chart, and that's what we want to do as a traders. We want to take the lowest risk, because this is not a scientific process where you could get in one price and get out the other. You have to limit the risk. This is actually going to Vegas in some ways. You don't know what company's coming out, what news one day, and what happens in the world is going to affect the whole market. So basically, you're into this and you're hoping until you could get to a point where you say, hey, this is no longer hoping. I have kind of figured out the best risk reward here. Now I feel much better trading at this level, knowing that the stochastics are oversold. This is a pattern. All these things tie together. I'm gonna get a nice bounce, and we are getting a nice bounce, and that continues to look good. And that looks like a great trade all the way out of this. CHK, RIMM. RIM, research in motion. You all know the stock very well. Well, I'm in the room, and a lot of people probably listening to this probably they'll remember the trade because I was in the room, and someone asked me, "Hey, John, DayTraderRockStar, take a look at RIM." So I looked at RIM, and for some reason, we're talking intraday, so I'm looking at the 5-minute chart, and I said, "Yeah," but for some reason, I think I went to the daily chart, and I looked at it, and I said, "Oh my God!" Smacked me right in the face like a fish. I saw the stochastics pulling right down. I saw the consolidation here, and and this was actually right here. This was on Monday, and I said, stochastic divergence is a great setup. Get in it, and everyone got in it, and it ran. And at the end of the day, I said we're going to get a nice follow through the next day. This is a pure stochastic crossover. We had to cross over that day. It was everything. We had volume. Everything told me we're going to have a run on this. So it was a very good momentum play. A lot of people took this for excellent money, and it still looks interesting. I wouldn't get in here. Of course, we're running. This is getting a little opposite of the. This is now starting to get into a area where you're getting overbought. You're running into a trend. You're running into a moving average here. A possible reversal here. So that's it's a high risk entry if you want to go long here. There's nothing that's setting up, but once you see the signal saying, hey, this is a low risk entry, boom, you get your big move. And that's another thing we want to do. We want to get into the market with our money and take it out as fast as we can. We don't want to be waiting here, for 15 days before it gets a nice trend. That's not, so these stochastic in there. Here's CAVM. Could you recognize the similar patterns here? All right. Nice sideways consolidation over stochastic, boom. That's another one. JBL circuits. This was a good example of an overall. And again, I want to just go back to this and give you the overall. Once you start establishing a pattern, you could easily trade that pattern. Again, use the stochastics to do that. And I went over this fast on the show, and I'm going to go over it right now, how to do this real fast. Just trying to fill this video up with positive and good information. Once you have 3 points on a chart, you could really sometimes start establishing the fourth and fifth point. So what I usually do is I go 1, 2, 3, or 1, 2, 3, 1, 2, 3. These are the 3 points that first established themselves. So I'm saying, all right, I have two. Once I have 2 lines, I could either, if it's on the top or on the bottom, I could put that 1 line in here. 2 points, you could draw a line. That's the rule, and you're going to be your first trend line. Now, because stocks work in certain ways, there's really one way I want to look at this thing. Is if this thing made there was only one trade I would take on this, is if this this trend line, which you put in one line, you just make a parallel line, so you automatically make a channel, even though it's not tested here, but you just make a parallel line based on this line down here. So to stretch it out, make it a parallel line, and then what I would do is, I would just wait on it. And if I did see that area and I see the stochastics here, I would definitely consider looking at that area for a trade. And and as you can see right there, you had all the indicators lining up. You have overbought stochastics. You have a parallel line which you put in yourself. So you're already timing your trade. You're already making your trade work for your. You're already proactive on your trade. You're going to take this trade down here. You're going to be shorting here. And the same thing when it gets down here, you're going to have that line in there. And if it comes down there and the stochastics are oversold like they are right there, boom. What are you going to do? You're going to take that long there. You're going to scale in, and and we'll see what happens here. There, chops around there. But it moves up here, a good enough trade where you would be taking that off. So a very good, just waiting on your indicators. And again, we actually get a breakout here. So after 1, 2, 3, 4, and because this is a downward channel, you're looking for the breakout to the upside. So 5 or 7 are usually really good high probability trades if you get up to that way. 5, 6, 7. So 5 and 7 down here are usually really good trades to take for a longer term hold. And then this one, just you could actually see what happened is we pulled back, and watching the stochastics at this point, you can see the stochastics pulling back real fast, yet we're not moving. We're moving sideways. And then, of course, we got a crossover in the stochastics and a fast little rally there. But that was telling you that there was no more weakness in here, and there was going to be strength coming right back in on JBL. That's what those stochastics do for you. And one more trade here. This was actually a good example of stochastic price divergence. And again, here's your low. Here's an established trend line. And once a stock, what I call makes a full rotation, you start to look for that price divergence. So you have a downtrending line here, and you actually have what's called like an embedded stochastics to the downside, meaning there's a lot of weakness in here. But every so often you get the crosses, you get little pops and stuff. But once you get that crossover, try to look for that full rotation, meaning go from the lows to the highs. And once you get to that high and we start coming back down, then this next one becomes really active. So this really counts, this one. This pulls back here, and you can see the price holding off the recent lows. So that combination pushed up against the trend line normally tells me we're going to get a crossover, and we're going to, because we're so close to this, normally you get oversold here and you go up to a trend line, you get overbought, and you continue that trend. We were oversold here. So we had, plenty of range to really break out there in the momentum. This is a good momentum indicator. So I knew we were going to break to the upside aggressively just because we had the momentum. Once you get that crossover and you get those buy signals and the buyers start to come in, you get a nice move in the market. So I did a lot of information there. I hope you all got it. Again, I want to actually send out the 10 for 1,000 watch list tonight for you, for the members of the site. And I want to get back to my research, but very happy to show you what exactly I look for in my research. Again, the two types of divergences on the stochastics. Basically, the price divergence, where the price holds off the recent lows and the stochastics make new lows, or the regular divergence between the positive stochastic divergence, where you have a sideways action in the price level, the stochastics pull all the way back, and then you get a turn up and it just breaks out to the upside. So two types of divergences there, and two of my favorite patterns to trade, and that's how you become successful at the market. So hope to see you in the markets. That's Day Trader Radio and Day Trader Rockstar signing off.